Now, while Goldman Sachs is panicking about AI jobs being taken, what they're missing is the much bigger picture. The much bigger picture is that we're not just in a technological revolution of AI and Bitcoin and decentralization. We're in the final phase of an 80-year financial cycle that's actually resetting right now. There's a 40-year bull market in bonds that started back in the 1980s, and it's ending. Government debt levels, unsustainable. And here's the paradox. The very system that the governments are trying to save right now with money printing is designed to steal the very gains of AI from you. That's the paradox. And this creates a perfect storm.
When U.S. inflation spiked to 9% 2 years ago, the numbers weren't abstract. They hit paychecks directly. Mark Moss points out that someone earning $30 an hour had to work an extra 10 hours every month just to keep their lifestyle from slipping. Those hours could have gone to family, health, or building something new, but instead they were sacrificed just to tread water. Moss says that cycle is finally starting to break. We're living through the largest productivity leap since the 1870s, the AI revolution. For the first time since the creation of the Federal Reserve in 1913, there's also a real alternative to fiat money, Bitcoin. Unlike the dollar, its supply is capped at 21 million. That scarcity means the gains from AI can be captured and stored without being siphoned away by inflation. He frames it simply: AI generates the energy of massive productivity, while Bitcoin functions as the battery that preserves it. Fiat systems fight against natural deflation, constantly diluting savings to keep the cycle going. Bitcoin does the opposite. It locks in the benefits, allowing money to buy more over time and securing the true dividends of innovation. For over a century, Moss argues, inflation has quietly stolen the wealth created by new technologies. The prosperity went somewhere, just not to the people who created it. Now, the pairing of AI and Bitcoin changes that dynamic. Digital abundance meets digital scarcity, and for the first time in modern history, ordinary people may finally keep the prosperity that technology delivers. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Technology improves, costs fall, prices fall, so everyone gets more purchasing power. You work less, your money buys you more goods and services in the future. But under fiat money, technology improves still, costs fall again, but this time central banks immediately print money to fight that healthy deflation. Real productivity gains get inflated away before they reach working people. It's a leaky bucket. Technology is making our lives easier. We are working less because technology does it, but all of those gains get taken away. Let me put this into some perspective and some numbers for you. About 2 years ago, inflation in the United States reached 9%. That means for the average person making $30 an hour, they had to work an extra 10 hours per month just to buy the same amount of goods and services that they did the month before. An extra 10 hours per month that could have gone to your health or your fitness, your new business, your family. But instead, you had to work those hours just to have the same quality of life that you had the month before. But this time is different. This time we have the biggest productivity revolution with AI that we've seen since the 1870s. It's happening right now. And for the first time since 1913, we have a sound money alternative. We have absolute scarcity meeting infinite efficiency. For the first time in 110 years, we can actually keep the gains. That's where Bitcoin comes in. Instead of watching your purchasing power dwindle down, instead of watching your purchasing power seep out of this leaky bucket for the last 110 years, we have digital sound money. We have Bitcoin. And here's how it captures the deflation dividend. So when AI makes us 40% more efficient, more productive, we can take that time, that cost savings that we get, and now we can store that in Bitcoin. Bitcoin, of course, is the only digital asset, scarce asset with a fixed supply of only 21 million. No central bank can print more, no politician can debase it. Your AI productivity gains that the world gets are able to be locked in Bitcoin permanently, and the energy cannot leak out of it. So Bitcoin fixes that leaky bucket of fiat money. So if we look at and compare the properties, we can see the stark difference. Fiat money has unlimited supply. It has central control. And fiat money fights this natural, healthy deflation. Bitcoin, on the other hand, is fixed supply. It's completely decentralized. Nobody controls it. It preserves that healthy deflation so our money can buy us more goods and services in the future. It stores our productivity gains perfectly across time. This is the first time technology in over a century is actually allowing us to capture the technological progress. Now, remember, we talked about the 4 distinct phases of this 50-year technological cycle. There's the institution phase in phase 1. Bitcoin's in that phase. We're seeing now in phase 2, the institutions are here. MicroStrategy, or now Strategy, is buying up as much Bitcoin as they can. Metaplanet, we keep seeing their ads pop up. They're on a race to buy Bitcoin. Every treasury company is trying to add as much Bitcoin as they can to the balance sheets. Governments are starting to accumulate Bitcoin at a rapid rate. We're watching the smart money position before this mass deployment starts to happen. The frenzy phase for Bitcoin parallels what's happening with AI. Because in these 50-year technological revolution cycles, it's not about one single technology, it's a cluster. And so Bitcoin and AI are tracking together. Both technologies are converging at the perfect moment. It's not a coincidence. This is how the cycles work. And here's the perfect pairing. AI plus Bitcoin equals the productivity revolution that we finally get to keep. Think of it this way. AI is the engine that generates massive economic energy, and Bitcoin is the battery that now stores that economic energy. We like that? Bitcoin is that battery. Now, this is digital abundance meeting digital scarcity for the first time in history. Technology finally serves us, not just central bankers. Now, for 110 years, as I showed you, our productivity gains have been stolen continuously by the money printer. Working against technology, every time we make our lives easier, they take a little bit away. AI is now creating the largest abundance boom in history. Don't get caught up in the doomers. They're just running cover so they can continue to print money and steal that from you. The greatest era of abundance is right in front of us. The biggest abundance in history is right in front of us. And now Bitcoin makes sure we finally get to keep it.
Mark Moss says Wall Street has its eyes on the wrong problem. While banks like Goldman Sachs panic about AI wiping out jobs, they're missing the bigger picture. What's unfolding isn't just about automation or digital money, it's the convergence of 3 historic cycles. The first is financial. The 40-year bond bull market that started in the early 1980s has ended. Debt levels are now so extreme that governments can't escape without resorting to relentless money printing. But the irony, Moss notes, is that this very system, the one designed to preserve itself through inflation, is the same system that drains away the productivity gains new technology could deliver. The second is technological. Every 50 years, innovation reshapes the economy. AI, Bitcoin, and decentralization are the drivers this time. AI produces exponential efficiency, while Bitcoin provides a sound money foundation to actually store those gains. Together, they represent a shift as profound as the steam engine or the internet. The third is political. Roughly every 250 years, the global order resets. Institutions lose legitimacy, old systems collapse, and new governance structures emerge. Moss believes we're right at that inflection point. Taken alone, each of these cycles would be significant. Together, their overlap creates a perfect storm, and with it, a once-in-generations global reset. Let's get back to the interview.
Now, while Goldman Sachs is panicking about AI jobs being taken, what they're missing is the much bigger picture. The much bigger picture is that we're not just in a technological revolution of AI and Bitcoin and decentralization. We're in the final phase of an 80-year financial cycle that's actually resetting right now. There's a 40-year bull market in bonds that started back in the 1980s, and it's ending. Government debt levels, unsustainable. And here's the paradox. The very system that the governments are trying to save right now with money printing is designed to steal the very gains of AI from you. That's the paradox. And this creates a perfect storm. I talk a lot about cycles. It's not just a 50-year technological cycle that we have right now or an 80-year financial cycle I just showed you, but there's actually 3 cycles that are converging right now for the same time: a 50-year technological revolution cycle, an 80-year financial cycle, and a 250-year political revolution cycle. You see, the entire world is shifting right now, but very few see what's actually going on. While Goldman Sachs is panicking about AI, they're missing the bigger picture. But for now, we're going to keep this short. We're going to keep this into focusing on just the single 50-year technological revolution cycle, because that is the blueprint for what I want to talk about right now. It's what I call a quantum leap. It's where humanity takes this giant leap forward, and it happens about every 50 years. It's happened 6 times now in the last 250 years. Since the Industrial Revolution, and I'm going to walk you through those. And this blueprint happens about a 50-year time period, and there's 4 distinct phases that this goes through. Phase 1 is the technology emerges. It was introduced, it's fun, it's revolutionary, it's disruptive. We try a bunch of different things. Early adopters experiment with this technology. We got Bitcoin, then we got a cryptocurrency boom. Phase 2 is where we have the panic and the resistance. This is where AI is right now. The establishment starts to panic. Oh my gosh, governments need to get a control on this. Goldman Sachs says it's going to take everybody's jobs. What are we going to do? Workers start fearing replacement. Let's start talking about welfare, universal basic income. Phase 3, adoption, integration. Now the technology proves it's valuable. Businesses integrate it. New jobs start to emerge. And phase 4 is the transformation and the abundance. That's where the society is completely transformed. Living standards rise. But not if governments have their way with it. We're going to talk about that. Now, every generation thinks that this time is different. Anyone heard that before? This time is different? Well, I have the receipts. I have the receipts for 250 years of data that every 50 years, the tech wave kills drudgery, not jobs. For 250 years, the doomers have been wrong, and they're going to continue to be wrong, because the mistake that they make is they're mistaking task disruption with job disruption. It's a big difference. All right, we're going to run through this. Now, first of all, like I said, there's been 6 of these, and every time a cycle repeats, it's more likely to repeat again.
What stands out in Moss's perspective is the scale of transition he describes. The pressure isn't just about rising prices, wages stretched thin, or fears of job displacement. It's about the collision of financial exhaustion, breakthrough technologies, and a political landscape losing credibility all at the same time. He paints a future where artificial intelligence pushes productivity to heights the modern world hasn't experienced, and where digital scarcity in the form of Bitcoin offers a way to actually hold on to that progress rather than watch it erode through policy-driven currency decay. Layered over that is the recognition that global power structures rarely last forever, and when they shift, they often do so suddenly. The suggestion is clear. We're not facing a single disruptive trend, but a convergence that could redefine money, markets, and governance in ways few are prepared for. Will this convergence be remembered as the moment ordinary people finally gain the tools to preserve the benefits of innovation, or as another turning point where entrenched systems found a way to absorb and redirect the gains for themselves? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.